Hello, happy Sunday. Today we are talking about 5 tips to make you a great investor. Now, if you don't know the difference between trading and investing, I've included a link in the description to a blog post that I wrote about what the difference is between trading and investing, because I know some people aren't really sure what the difference is, or that there is a difference. So check that link out if you don't know what the difference is. For those that don't know me, my name is Tela Holcomb. I'm your trading and investment coach, and I teach you how to create a monthly income and build a financial legacy through trading and investing in the stock market. Hey Aubrey, thanks for joining. Now, for any information that I provide in this broadcast, it is only for educational purposes. Please do your own research and your own homework. Nothing that I mention here is it's not advice for you to go and buy or sell any companies that I might mention here, okay? So if you could, please take a moment and share this video out so that we can get some more viewers in and just get some more people educated on trading and investing in the stock market, okay? Again, so our topic today is 5 tips to make you a better investor. Like I said, if you don't know what the difference is between trading and investing, I've included a link in the description of this video. Please take a look at that blog post and it'll tell you the difference between trading and investing. Now, the first tip I have for you on being a great investor is, first off, don't use money that you need right now. So don't use money that's for your mortgage or your car payment or any set of funds that you're going to need in the near future, because when you're investing, it's for a long period of time, usually years to decades, and you don't want to tie up money that you're going to need for something else, okay? So please don't use money that you need immediately, because when you tie it up in the stock market, you probably won't be able to get it out fast enough to use it for what you need it for, okay? So don't use money you need right now. Tip number 2 is invest periodically. So don't buy stocks all year round. When you're investing, there's only a few times a year where long-term stocks are good for investing. So you want to make sure you're not buying them all the time, every day, every month, because it's not always the best time to buy those stocks. So you'll have to do your research on when is usually about the time where a certain stock goes up, depending on what long-term stock you're looking at. You want to look at when throughout the year does it tend to start to go up for a long run or a long period of time. That 1 to maybe 3 times a year is your best time to buy that stock for investing. Otherwise, you don't buy that stock. You don't buy more shares of it. What you do is you take the money, say you're allotting a certain portion of your paycheck to buy more shares or to invest with. You want to get in the habit of putting that money away. So maybe put it into a savings account or put it into your investment or your brokerage account just as cash only, because cash is a position. Remember that. So put that cash into your account for it to just sit there until those 1 to maybe 3 times of the year where it is a good time to buy more of your long-term investment stocks, okay? So don't just go buying them whenever you feel like it, whenever the sun comes up, whenever the sun comes down, okay? Just buy them during those certain times of the year, and it'll be a better investment for you, or you'll have a better outlook or return. So my third thing is diversify, because I know everyone's like, well, what's a long-term stock? So one thing we already talked about in a previous video, what do you want to look for in long-term investments? Now, when you find those long-term investments or things in those long-term investments, you want to make sure you diversify. You don't want to buy nothing but tech stocks or nothing but bio stocks or car industry or consumer. You want to diversify over about 10 to 12 different stocks. You don't want to put all of your money into one sector or one industry, because what if that one industry has some bad news? Like, for instance, the car manufacturing industry has had its share of bad news in the last 2-3 years. Now, if all of your money was in car manufacturers, then you probably wouldn't be doing too well. You know, you would have seen or had a large ding in your investments if you had all of your money in car manufacturers. So that's why you want to diversify and have your money spread out between different industries, okay? You don't, tip number 4 is it's not a popularity contest, okay? So you don't want to pick popular stocks. Weird, huh? No, it's not. You really don't want to pick popular stocks. You don't want to be buying, I love you Tesla, but right now you don't want to buy Tesla as a long-term investment. You don't want to buy, say, Google as a long-term investment. You want the most boring stock you can think of for your long-term investments, because they're not going to move a lot. They are not going to drop suddenly in, you know, just day to day, because those more popular stocks move more because more people are trading them. Now, I know you're like, well, I do want it to move a lot. Yeah, you want it to move a lot going up, but what happens when it moves a lot going down? A lot of people freak out when that happens, and they sell, which is usually the wrong time to sell. But if you buy those long-term stocks that are not popular, say they've been around, I say long-term stocks, and what I mean by that is they're companies that have been around for a long time. They're gonna be around for even longer. And when I say that, I think of companies like GE, Coca-Cola. I'm gonna look on my board because that's my long-term stocks. But GE, Coca-Cola, General Mills, Johnson & Johnson, Hershey, those types of companies are what I mean by long-term stocks. Like, they've been around for a long time and they will be around for an even longer time. You want to look for those stocks, not the popular ones. You want the ones that are kind of boring, okay? That's what you want when you're looking for a long-term investment. So invest in the boring, long-term, the old guys that have been here around. Invest in those. Don't invest in the popular ones who are just getting on the scene and trying to, you know, make a name for themselves, like Tesla and Facebook, okay? Now, tip number 5, leave it alone. That's your 5th tip. Leave it alone. Don't go messing with your investments once you've bought them, or switch them around and moving them, and just leave it alone. It's an investment. It's a long-term investment, so it's going to be years. It's going to be decades. Just buy it and leave it alone. And wait for the next time that it's a good, you know, time of the year to buy more stocks. Leave it alone. So your 5 tips were: 1, don't use money that you need right now or any time in the near future. Tip number 2, invest periodically, just certain times throughout the year where that stock tends to go up. And you can find that information on Yahoo Finance. So go to Yahoo Finance, look at their historical numbers and see when do they usually start to do a big run up, okay? Tip number 3, like I said, diversify. 10 to 12, I would say no more than 20 stocks, and you want to diversify against or between several different sectors or industries, okay? Tip number 3, don't be popular. Don't pick the popular guys out there on the market, okay? You want boring when it comes to your long-term investments. We're not trading here, okay? And tip number 5, leave it alone, okay? Well, thank you guys for joining me today. Again, if you don't know the difference between trading and investing, please see the link in the description to the blog post that I linked to. That will tell you what the difference is, so you know what you're doing, whether you're trading or you're investing, and how to do those. Okay? Well, I'll see you guys next time. Bye.